Hey guys, how's it going, man? Today I'm gonna talk about is GameStop short squeeze, and this video is just mainly educational and entertainment purposes. There's no any financial advice, and I'm not a financial advisor. So let's talk about it and what's what everybody's talking about is GameStop short squeeze in this couple days, and it's been a historical moment in the trading world or the stock market. Okay, it's just one of the things that I never seen it before, and so how crazy this thing is like in January. So a short squeeze happened, on the GameStop. You know, one of the you know one of the company that actually, like, there's so many short flows in this GameStop stocks, and then whole bunch of retail traders from WallStreetBets. So it's one of the Reddit finance community that have 7.6 million members now. So they got they pretty much got together, be like, hey, hedge funds, you guys short, heavy short, this GameStop, positions, and they pretty much they come in and start buying GameStop shares from the 20s, and from the 20s, and it make all the way up to, like, $500, share. So let's explain a little bit what's the source, short squeeze is, or what the short position, or how you short a stock. Okay, like, so usually what happens is, like, when you see a stock that going so high or overvalue, usually short sellers like hedge funds, or or even some retail traders, they can short their stock, right? They can, for example, like, you can see GameStop ran up all the way from, like, let's say $20 all the way to 50 no for to $500. So you can have a short position right here at 500. So it's pretty much, when you have short position, like, you pretty much borrow the shares that you pretty much borrow the shares that you don't have, and then and you hope the stock price drops, and then you start buying, and then you start buying back the share at the low price and return that share to the broker or whatever. So you make the difference between, let's say, you borrow the shares at 500, and then when the price drop down to 200, and then you start buying back at 200, and then you return the share. So you make the difference between this right here, right? So that $300 difference is your gain. So that's what most hedge fund, like those short sellers, hedge funds, that's what they do, right? They see either overvalued stocks, or they see a company that is not doing good, but their share price so high, so they would come in and heavily short that, that particular company stocks. So what happened when they shorted? So when they shorted, I mean that, that the stock would go, would go back down, right? Because they are heavily, like, believing it, the stock will go back down. So in this case right here, that in this case right here, that you know you have 7 million of, Wall Street bet retail traders over here bet against it, that they think that GameStop would, they think that GameStop would be worth more than what it should be. So they just come in and start buying the share, and hold the share. So there's less shares out there for, for the hedge fund to buy to cover, or they had less, share out there for them to, like, like, to buy back. So it's pretty much like supply and demand. You don't have shares out there to buy it back. So so the stock price kept going higher. So the hedge fund had to sell it, to cut the loss, right? So that's what happened. It drove the price all the way to $500. So this is one of the historical moment that, that happened. Is, it's just crazy that, and you know uh a lot of people that, still holding it, or still, AMC is the same way. Okay, Express is the same way. So this is, those company are heavily, in the short flow. So a lot of hedge fund that, have heavy short positions in those, few companies. Okay, so let's say I'm not a financial advisor. This is mainly educational, and entertainment purposes, because this is one of the historical moment. I guess I had to kind of, like, talk about it a little bit. So, if you are still holding it as shares at $300 at GameStop, or to I would say that would be manage your risk, because because I think last Friday or Thursday that Robinhood, another another brokerage store, putting restrictions on like all those company like GameStops or AMC. They allow them to sell, but they're not allow them to buy. So what that happens? So that happens, like you allowed to sell, right, and you're not allowed to buy. So what happens? The shares gonna drop, right? So you see how from 500 drop all the way to 300, right? So that's what happens. So you might think there's a lot more restrictions going to be out there like this. So like I say, manage your risk, and this strictly just a educational and entertainment purposes on this GameStop short squeeze. And this is, I never see something like this happen. Like it's just one of those craziest thing. But if you guys if you guys follow Wall Street Bet, or you guys follow all the GameStop source squeeze social medias, and it's one of the moment, everybody just get together and so you know uh doing things and here and there. But like I would say that you still need to manage your risk on here. And and it's fun to watch, it's fun to like see all this retail trader that that they have the community can do something like this. But you know uh you know like I say, it's from two, GameStop from 20 to 300. So you already up so much already. There's so much risk, downside risk right here. So you know you gotta watch out here a little bit. But yeah, so I'm not a financial advisor, but anyways, please like and subscribe my channel. And I also have a free Discord below that we talk about a lot of trading strategies or informations. And that's it, guys. Thank you so much.